Hello, everybody, and welcome to another episode of Raise, the No BS fundraising podcast. Very excited today to have Deepak Ravindran from Oddbox with us today. Hi, Deepak. How are you?
I'm really good, Nick. Yeah, really good.
Excellent. Well, hopefully the pitter patter of the rain won't do anything too crazy for this recording, but let's see. So before we kind of do maybe a whole kind of arc of the story of your company for a couple minutes, just want to ask a couple super quick questions to kind of warm us up here with regard to fundraising. So when you hear the word fundraising,
Uh-huh.
what's like the first word or emotion or concept that just comes to your mind?
Painful. That's the first word that comes up. I'm starting off on a negative note, but it's just the reality.
Yeah. All right. Fair enough. And I also agree. How about what myth have you heard or did you kind of participate in before you'd fundraise much that you now know is really not true as it relates to fundraising?
Yeah, the myth about fundraising that I've heard before is if you have traction and a great mission, the money just flows. It doesn't. There's several things that need to come into place. Even with strong demand and a clear purpose, investors still hesitate. They want to know what the true growth potential is, for sure, but they also don't want to lose their underpants. So they look at risk as well. So risk and reward is obviously the key thing that investors are looking for. And again, fundraising isn't automatic. It's all about timing, market timing. It's about pitch refinement. Your first pitches are usually a bit rubbish. You keep refining them. And it's about persistence, having that mindset that it's not personal. It's just you've got to kiss a lot of frogs before you find the right one. And just that persistence, really. Yeah.
Very good. So tell us a little bit about Oddbox at a high level, what the business is, why you and your co-founder / wife came up with that business in the first place, how much money you've raised, where the business is currently at, and then we'll start doing some more deep diving.
Yeah, sure. So the idea came about when Emily, my wife, and my co-founder, and I went away to holiday in Portugal, no less. And we went to a local street market, as you do, and we came across this really ugly but delicious red tomato, which was completely unappealing on the outside, but very delicious on the inside. And that tomato made us pause and ask, why is it that you don't find these ugly looking veg in our local supermarkets in London? Why was it that everything looked so perfect on the outside, but tasted a bit rubbish and also in plastic packaging? That then made us go down this route of discovery where we tried to understand what was happening to these ugly things. And we came across this massive problem of food waste that happens at a farm level. Just kind of paint the picture. Up 20 to 40% of stuff that gets produced for human consumption doesn't even leave the farm gates because of size, shape, color, or because it's surplus to requirements. And then they either get sent to landfill or animal feed or other channels that are not very financially viable for the farmer. And then all this kind of landfill thing causes food waste, which has a direct impact on climate change. And so, in summary, what we decided to do was work directly with these growers, pay them a fair price for misshapen and surplus produce, and then deliver that directly to people's doors via a D2C, direct-to-consumer subscription food box, delivery box scheme. Yeah, so that's the kind of origin story of Oddbox.
I know we chatted about this, but quite funny that a tomato kind of also changed my life and perception of the world here. Also in Portugal, when we grew veg for the first time after living in London for 10 years and pretty much the rest of my life before that in Washington, D.C., and just taking that first bite of an actually homegrown tomato and just all these realizations flowing through me. Why am I buying this stuff in plastic packages from Tesco, Waitrose, etc., when clearly there's other ways to get great local fruit and veg? So yeah, funny that a tomato changed both of our lives. Mine a little bit more prosaically, at least on the vegetable level, than probably yours, but interesting nonetheless. And so How many rounds have you raised? How much total capital have you raised? Paint a picture of where the company is today.
Yeah. So we've raised 4 rounds so far, not counting the kind of minor in between rounds with angels and so on. We've raised about 25 million pounds in, yeah, so, and it's been through a range of investors across angels, venture capital trusts, as well as venture capital as well.
Okay. And today, like, I don't know which metrics you're comfortable sharing, but like, how many people does the business have? What kind of revenue level are you at today? What kind of geographic coverage do you have? How many vegetables are shipped per day? I don't know what metrics you want to share, but would love just so the audience can get a sense of now the scale of the business before we go all the way back to the really early days.
Yeah, sure. So to date, we've delivered over 10 million boxes to 600,000 households in the UK. We currently have about 50,000 active subscribers, monthly, weekly or fortnightly subscribers. We about, roughly around the 30 million pound mark revenue business. We've got about, it's a 60 people team. And I think those are the key metrics that come to mind.
That's amazing. That's a lot of ugly but very tasty fruit and veg to be shipped all around the UK. Well done, sir.
We like to think so, yes.
All right. So now we're going to kind of rewind all the way back because, the later stage funding rounds, super fascinating. But actually, I think the majority of people out there need help understanding what happens in those early days. So let's go all the way back to when you first thought of the idea. At what point did you think we need to raise capital for this, and why?
Yeah, look, I mean, there wasn't one dramatic week as such. Funnily enough, Emily's relative, who's a successful entrepreneur himself, believed in the business far more than we did in the early days. And he helped us realize what the business could be. So the vision, right? So you hear all these stories about grand vision from the founders and so on. We were not visionary founders. We're just normal people trying to have an impact in our lives, leave a legacy that we were proud of. Did the picture, and we also had a waiting list of customers that was building up. We were like, oh yes, looks like it's much bigger than we thought it would be. We were purely South London based then. This is in year 2 of the business, so we had about 1,500 subscribers, South London based.
And sorry, what's year 0, year 1, year 2, just in terms of actual year number for us to follow along?
Yeah, so 2016 is when we started the business, and this is 2018, and we bootstrapped for the first 2 years simply because we didn't have any grand ambitions, and we are finance professionals by training, and we essentially want to run a business that was financially sustainable rather than thinking about how do you raise investment and scale this. So it's kind of a week in, week out survival mode. We were focused on the impact and the mission more than how big this business could be. And when we had this conversation with Emily's relative, we were like, so there could be something bigger here. And we built a waiting list of 1,000 people outside South London. And we went, but we didn't know how to reach that because we didn't have the capex to do so. And then one of our customers reached out and asked about investing, whether he could invest. And then we worked with him on the financial model. And that conversation sparked the fundraising journey. Funnily enough, he didn't invest at the end, but he did help us refine the pitch. But all of this it just came together, and we decided we kind of all joined an accelerator as well called NatWest, where other people were raising. And we just thought, maybe this is the right time to raise and scale the business to the next level. So it wasn't 1 week. It was a collection of events and kind of different circumstances and people that came along the way.
Okay. So it sounds like some kind of sort of like pre-seed leading up to your eventual £500,000 seed in 18. Is that right? There was pre-seed funding that came in, or no, that was more conversations and then you went for kind of a proper seed?
Exactly. So there's no pre-seed. The only money that went into the business at this point was a director's loan that was from us, from our savings. And there was a Virgin startup loan as well of 25 grand. So it was all run through kind of debt at that point in time rather than equity. And the first equity round came in 2018 through an angel syndicate and crowdfunding as well at the same time.
Okay. And so as I ask you questions, as always, just please be as transparent as you can. If you can't comment, just just say. I'll try not to push too hard. But so 25 came in from Virgin. You were
Yes.
at the NatWest Accelerator, but they didn't give you capital.
No, they didn't give us
Okay.
capital. No.
And then what size was the director loan that you guys put in as founders? Is this like a 6-figure number or a smaller number? What are we talking about?
I think it was a 30 grand mark. Yeah.
Okay. Okay. So less than 100 kind of internally constructed. I guess you don't even consider it a pre-seed. Some might, but
Yeah.
fair enough.
Yeah.
Okay, so then you're moving into 2018, and I guess it sounds like, yeah, you had the confidence from possibly even your peer group, seeing other people raising that, okay, maybe the timing is right. The metrics feel good enough. Clearly, you're both very financially oriented, and something gave you the confidence to say, okay, let's go out and raise a proper round from some externals.
Yeah.
Okay, so let's dive into this seed round in 2018. About half of it came from angels directly, correct? And the other half came from crowdfunding. So should we just kind of go through maybe the direct piece and half of it, and then we can go through the crowdfunding journey as well? Does that make sense?
Absolutely. Absolutely. Yeah. So let me just kind of run you through the order of things. The first thing we started doing is we started pitching at different events. And these were anything from angel syndicate events to events run by law firms that want to be part of the startup ecosystem, to kind of just like, there was some price. I think that it's called the pitch. I think that's what it's called, where you can just go and pitch. And essentially, as you do, like most businesses would resonate with this, is you hear a lot of no's than yeses. And most investors find one or the other chink in the armor to say why they can't invest in the business, which is fair play, I suppose. Not that fair play when we're actually doing it, but nevertheless, in looking back, it feels like fair play. And now that I'm an investor myself, and really through that process, we also found a person who had worked in investment firms and was doing this pitch consulting role. And this person then, because the funny thing in all of this is, even though we were finance professionals, we didn't understand investment and fundraising and what language investors speak. As you do, we were selling the business and the pitch. Oh, here's this amazing business. Here's a vision. Here's a mission, and so on. Investors were more interested in the ROI. Just tell me the return. How big this could be, or how have you addressed that risk? Have you addressed this risk? And it was kind of quite disheartening in those days. But I suppose it was all for a reason. And then we found this Impact Angels Syndicate, run by this defunct firm called Clearly So. And it was great because Clearly So is purely for impact businesses, and they're quite picky about who they choose. And we had this, again, a pitch evening in like a boardroom kind of setting in front of, like, I don't know, 20, 30 investors, angel investors. Probably worthwhile bringing a story here. So we make this really scary pitch in front of these investors. I'm like, prepared for this for sure, but nothing prepares you for being live in a room full of some of them kind of in ties and suits and stuff like that. Anyway, we make this pitch, and then the floor opens up for questions. And then there's one person pipes up and says, I use Oddbox and I love it. I'm going, that just changed the temperature of the whole room. And I vividly remember this scenario. And this person essentially is Andy. We had met him at a local fair, a local event. Essentially, when we were doing marketing, we were just going up, rocking up with a box of fruit and veg and talking to people in a local market fair. And he just came with his family, became a subscriber, and we didn't even know he was an angel investor. Now, cutting back to the day we pitched, when this person said, I love Oddbox, and I'll be the lead investor, that suddenly just changed the whole thing, because we all know lead investors in the early days are the most difficult, this kind of unicorn to find, right? Once you find the lead investor, people are willing to follow. People like to follow. People don't want to lead, right? I mean, so what does that even mean? Leading. That was an angel run. I mean, what does that even mean, right? Leading.
Yeah.
But nevertheless, that then brought in another 5 or 6 people who signed up on the same day. And then, so that was one. So we got, I think, probably 200 grand from that pitch event alone.
Wow.
And then,
And he literally said, "I will lead this" out loud
yes,
to the audience. That's
yeah, I'm happy to
unbelievable.
lead. I'm happy to lead. This is what he said. And I was like, that's great. And that was great networking evening. I think another angel investor came to another pitch event that we did at a law firm. I don't remember which one. I think Jolson's, I think, I'm not sure. But nevertheless, and again, she came on board as well as an angel. And that was the kind of the first tranche of capital. And then we thought, well, hold on, equity crowdfunding seems like a great route for us as a direct-to-consumer business for two reasons. One was it's a great medium to bring all customers on board as investors, so buying into the journey that we were on. It's great for retention, word of mouth, and so on. And then as a marketing channel, it's again, crowdfunding is great as well because, we're trying to build this pipeline outside South London, and marketing going beyond that was quite helpful for us in terms of our Google Meta ads and stuff like that as well. So yeah, so that was, and so the second half, so we launched the campaign on Cedars, now Republic, I think for 400 grand. I don't know exactly the numbers now, but we overfunded a 60-day campaign in day 10, and we overfunded to 150%. And we raised the second tranche there. What about 500 investors on board as well?
Okay, well done. On the crowdfunding side of things, it comes up a lot with companies I'm looking to invest in, companies I'm advising. I have a overall fairly jaded view because I think a lot about feedback loops with fundraising and the build, measure, learn cycle you get by going out either in front of an audience or one-on-one. Frankly, I think one-on-one is the best, especially the early stages of a raise, just so you work out the kinks. I call it burning meetings. Basically, go meet the opposite of your perfect ideal investor profile to begin with. Maybe they have money, maybe they could invest, but just see how they're responding to your narrative, your pitch, etc. But when you do a crowdfund, in my opinion, one thing founders usually don't really understand unless they're already like a hardcore B2C marketing machine with their business is it is very much like a systematic marketing exercise. And you have to know how the algorithm works. So tell me a little bit about what your impression of working with, Republic, previously Cedars, was going into it, and how you kind of more technically like manage the crowdfund. Because if you're going to do it, you got to do it right. And I would love more people to understand what doing it right looks like from a process perspective.
Yeah. So firstly, I think one thing to mention here is one of Republic's founders was one of our customers as well. And he was the one who convinced us over a glass of wine, I think, that we should go down Republic and not Crowdcube. But nevertheless, in terms of the process, I think once he handed us over to the sales team do a fantastic job of selling the campaign. In reality, though, as you were saying before, and I totally agree with you, it's a marketing campaign. And it comes down a lot down to treating it like what tactics can you use to make the campaign successful, which means anything from securing 30 to 40% of your target already and not going in with zero capital secured. Second, talking about the target, if you have a target in mind, reduce that by, let's say you want 500K, go for 350K or 300K, which means that you're going for a smaller amount, but it's got a higher chance of hitting an overfunding, because overfunding a crowdfunding campaign is where the magic really starts to happen. Because then you go into FOMO, where the investors don't want to miss out. It's the typical kind of sheep behind sheep campaign, essentially. So when people want to just pile on. So that's the second tip. The third one is we were looking at Cedars then, and then they would send out emails at specific trigger points in a campaign, which was as soon as a campaign launches. If a campaign is trending, i.e. they're seeing a lot of investors and a lot of kind of money coming in quite quickly. If a campaign has hit 50%, 75% and overfunding. And we were trying to essentially make sure we were trending at all points during those newsletter campaigns. So we would be in the top 3 at all points. And the way we did that is by essentially getting our friends and family to invest the smallest amount of money possible, even 10 quid. That's some, like that was just invest some amount of money, because the crowdfunding thing works on the crowd. Numbers matter as much as the quantum of the money. That's for us. So that was another one. So we were constantly in those newsletters going out, which essentially attracts more people, because a lot of investors just look at newsletters and then sign on. They think it's interesting. That's tactic number 3. Number 4 is we went to our customers before we launched crowdfunding, the campaign, we went to our customers and asked them a pre-pledge, i.e. how much would they be willing to give before they kind of, if we were to launch. The reality is not everybody follows through, but having that in hand and building a newsletter campaign around it then becomes quite super useful, because then you can tap into that and then customers do invest. So just, and then PR news campaigns. So we had a few seeds planted in a few journalists and stuff like that, which we just drip fed. And then finally, I'd say having a frequently asked questions list, where you think about what kind of questions might come your way and robustly answering some of those questions in a public forum quickly without being defensive makes people trust you as well, that you're not being defensive, B, bullshitting your way through, and C, kind of coming back with answers to some of those data metrics and stuff, or whatever the metrics that investors want. So I think, you need to be a well-oiled machine and go into that, because it is pretty onerous on the business. Yeah. Trying to crowdfund.
Yeah. That's a lot of brilliant tips. I'm going to try to summarize in just a moment. But I assume you also probably linked in product triggers, maybe on your website, your own mailing list,
Yes.
triggers maybe on checkout saying we have a crowdfund live as well. Like you probably productized the whole launch
100%.
as well, right? Okay.
100%.
Okay, so by my simple math while listening to you, I'm just making some notes. There's about 7 key tips. Number one is make sure you have a bunch of your funding locked in before you launch. You said 30 to 40%. I've heard numbers ranging up to 50%, but that makes total sense. Maybe 2 and 3 can even be combined, but you need to figure out how to basically be trending, look popular, and make sure you get to overfunded as fast as possible. You obviously went out to your own customers to make sure you generate interest first, which also probably helped you size how much you were raising. And then you did a whole multi-channel marketing campaign around it, including PR, making sure things like an FAQ are kept really up to date and feel alive as, I guess, people are interacting with the campaign.
Yes.
And a lot of internal product triggers as well. And so, this is such a great description, Deepak, because the number of time I talk to founders like, oh, do you think we should maybe we should just run a crowdfunding campaign? I'm like, look, if you want to run a crowdfunding campaign, no problem, but you better get your entire team basically on this. And this is like launching a brand new product in a way. It has to be taken that seriously and that systematically. Otherwise, if you don't get to overfunded, it's not the end of the world. I don't think it's going to bury your company, but it doesn't look very good if you don't meet your target and you may be trying to raise external capital outside the funding round as well. And it's very distracting. You can't really run a full fundraise, go to market in the more traditional way at the same time as a crowdfund, in my opinion. I mean, you can, but as the CEO, you have a business to run and now 2 very different funding strategies to be running simultaneously. How did you sequence them?
So we sequenced the angel round first.
Okay.
And then it's funny because some of our customers who are also investors put in some, I wouldn't say sizable, but 20 grand via the crowdfunding campaign as well.
That's sizable via crowdfund for sure.
Yeah. And they just see, they obviously, they meet us as founders. They know the product, and then they see the demand, and again, FOMO kicks in as well. And that's a great way to kind of get those people who might not have otherwise contributed if you'd just gone and asked them, because we didn't even know they existed as angels in the first place. So that's a great platform as well, bring them people of that on board. Yeah.
Yeah. Yeah.
But to your point, you've got to treat it like a marketing campaign and ideally sequence, get a big chunk of the money in through angels before the crowdfunding. Running it in parallel is doable, like a lot of things, but you're doing then three things in parallel, right? You're also running a business. And that's hard.
Totally. So looking back, what do you think most founders get wrong about crowdfunding? And what would you do differently, if anything, if you had to run that Seeders campaign today for your business again?
By the way, we ran another campaign, a convertible campaign on Seeders just 3 years ago now. Kind of brought in 1,000 investors. But looking back at the lessons learned, I feel crowdfunding platforms make a lot of promises at the start. The reality is they have one campaign manager managing multiple campaigns. So in terms of the support that they can provide you, it's not going to be on the marketing side. So if you want more people to know about the campaign, you've got to start early, and you've got to reach out to essentially everyone in your network. That's through LinkedIn, through email, through phone calls, and be a bit shameless about this thing, right? In a way, it's great because these people are not going to hand over their money to you via just an email, but a crowdfunding platform is a great medium to do so, even if it's £100. So it's okay. Then it's also kind of word of mouth and stuff like that. So that's number one. Reach out to as many people as possible and tap into your network through whatever medium is available. Number two, just discount what the platforms say in terms of support that they give them. And they might give you some meta ads, or they might give you some out of home campaigns, and that's okay. Maybe they might give that if you're able to negotiate that. It's great. But the day-to-day support is not going to be given by them simply because they don't have the bandwidth. Number three, I'd say study successful campaigns, recent running campaigns, and look at what's working. Why are they successful beyond the idea, and what are they doing to game this? There's a way to game the system, and what are the triggers that a Republic or a Crowdcube is using to market this to their investors? Is it email newsletters? So what are they using, and how can you appear in each and every single newsletter going forward, which is kind of what we thought about, which is what I said, the triggers. What are the triggers? And therefore, that is another way of ensuring you're there in those kind of moments of marketing, essentially. Yeah.
Great. All right. So I understand you're doing some other very interesting stuff now, including some fairly like high performance executive coaching. So I want to challenge you with some feelings, Deepak, and some emotions.
Yes.
So we'll start on maybe the slightly negative side of the emotional spectrum first, and then we'll flip it around. So I understand there were some big challenges during your funding rounds, at least the early ones. Like, what was the moment you most seriously considered walking away from the fundraise, and what helped you push through?
Yeah, I mean, look at several moments, right? I mean, my first call with an angel investor, absolute car crash, where he said, I don't like the name Oddbox. It sounds negative. Odd is negative. You hardly have any traction. Only friends, family, and fools, right? Whatever the adage is. Will invest in this, so you should be approaching them first. I'm not a fool, clearly. I was like something like a really short call out of a 1 hour call. It was like a 20-minute call, a 17-minute call. I think I recently posted on LinkedIn. So it was pretty brutal when somebody just discards your idea and your business like that. Various moments along that journey as well. I mean, many people say it won't work. I don't understand a business that is based on surplus. You're going to run out of surplus. You're going to do this. You're going to do that. How are you going to compete with supermarkets? So I think, look, at the end of the day, it took us you do take it personally, as much as the book of wisdom tells you don't take it personally. You have to kiss a lot of frogs before you find your perfect one, and so on. It's just, but I think at the moment it is super hard to take that. There's no two ways around it. You've got to go through that process and just have a thick skin on, really.
Yeah. Well, you may have already mentioned it in what you were just saying, but what was the most annoying, repetitive question you ever heard from multiple investors? Tell us a little about it. I feel like every single founder has some question that's just constantly getting hammered. And how did you get around that question?
So yeah, in the early days, I think it was always about, because we're a business based on availability of surplus, people were always asking us, well, what if the surplus runs out, right? And you won't have a business. So this is a business based on a limited availability of raw material, which is true. And we didn't know the answer then, but the reality is we whatever, we've got 50,000 subscribers now, and we're still going so without any issues. So we've kind of found a way. But the reality was we were just maybe trying to bullshit in the early days and realized that didn't work. But over time, we started building a robust FAQ where we said, look, we've got a strategy here to find growers and get enough customers, enough growers and enough supply. It's just about being confident about that, because even you've got to bullshit your way through sometimes, because you can't know all the answers, especially as you scale. You've got to find some of that along the way. And therefore, obviously that's not going to go down well, to investors, because investors want a bit of surety. So you just say, right, here's the strategy. You've thought about it. I think investors want to know you've thought about the risks. They don't want you to kind of have a risk register, ready in those early days. But all they want to understand is, have you thought about this risk? And do you have a plan for it, even though you don't have any kind of a strategy or something like that? So I think that's and by pitch number 50, we were ready with the answer.
Nice.
Yeah.
So one little last thing before the kind of outro here, but that moment when Andy Wales stood up at that Clearly So event and said what he said about wanting to lead and that he was a avidly happy customer. Like, what were the feelings? Can you remember like how your body felt? What, like, considering the nerves that you must have had, like what was the actual like felt experience of that moment?
I think it was just adrenaline leaving the body because I've never done a pitch in front of, like, a pitch for my business. I've done, presentations, but, in front of kind of 20 to 25 people, in a boardroom setting, and they kind of almost do or die feeling, right? But when that happened, when Andy stood up and said that, it was just this feeling of someone gets this, of all the noise we've heard, finally the one resounding yes. And it was great. It's great to kind of just go through that. It's kind of more relief than anything else, than joy. Or more the release of stress rather than euphoric feeling.
Fair enough. At least as from the outside, even as I said it out loud to you, I actually got goosebumps just imagining that moment for you. Very cool. Okay, so last little bits. Is there a founder or an investor that you would just recommend people follow that you're particularly impressed or interested by at the moment?
I mean, there's one VC, I think, Barcelona-based VC called Guillermo Flor, I think his name is.
Oh, yeah, I see his posts a lot. Yeah.
But I think that's he's only. I just like his post about venture capital kind of trends in the VC industry. But apart from that, nothing that springs to mind, and I can't really share more at this stage about who to avoid and who to go
No problem.
Public forum.
Yeah, no, this was more just on the positive side. Yeah. His stuff is fascinating. I follow it and love it as well. Let's see. What do you think trumps in a fundraise? Traction or narrative?
Traction.
Fair. And where can people find you? What are you up to these days? And do you have an ask just for yourself to mention to the audience?
Yeah, I mean, where can people find me? So my website is deepak-ravindran.com. So I am now non-exec director at Oddbox, and I'm trained to become an exec coach for founders who are either having to step up or looking to step aside and do something else, launch something else, just in terms of misalignment and energy. And yeah, I mean, there's no specific ask per se, but all I can say is my coaching is a mix of mentoring, of kind of lived experience, as well as kind of coaching, which is kind of more exploratory and discovery based.
Great. And I assume obviously eat some more Oddboxes, right? Let's go Oddbox.
Of course. Yeah.
All right. Well, Deepak, thank you so much. This was absolutely fascinating. Thank you for unpacking it all. Really appreciate it. And best of luck with everything.
Grateful for having me here. Thank you.
Cheers for now. Bye.
Take care. Bye.